You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody, that music means we are back. It is Monday. It is time once again for the Crypto Rundown, the program here on the network, where we go a little bit above and beyond. We go beyond our traditional stomping grounds of your VIX and your Apple and your Tesla puts, and we see what's cooking in the world of crypto derivatives. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network upon which so many of you folks are binging these days. Remember, if you just listened to the Crypto Rundown, you are missing out on over a dozen other shows coming at you. So wherever you're getting this show, theoptionsinsider.com is the place to go to get access to all that, or just subscribe to the Options Insider Radio Network feed, wherever you get your favorite podcast, your Apples, your Spotifys, your Audibles, all that fun. And of course, if you're ready to go above and beyond, you want to join us for an awesome pro Q&A session tomorrow. You want to be like our good friend Miss Gigi, who won the Pro Trading Crate for September. Theoptionsinsider.com/pro is the place to go to get access to all of that fun. As we keep on rolling, it's time to roll out the fun on the show, listeners. It is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the program where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up in the old hot seat is a newcomer to the program and indeed to the network. He is Pat Wood, the president and CEO of DelphX Capital Markets. Pat, welcome to the Crypto Rundown program.
Hi, Mark. Great being here. Thanks for having me.
And Pat, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the crypto, indeed financial space, as well as what it is you folks do over there at DelphX Capital Markets.
Sure. My background, Mark, is I'm a 30-year capital markets guy. I came out of Canada, and I think I've worn every hat that you could wear in this business, from stockbroker to institutional sales guy to investment banker. I ran my own merchant bank slash advisory for many years, which actually led me to crypto and blockchain, and currently, I'm wearing the hat of president CEO of DelphX Capital Markets, which is a publicly traded company. We're listed in the States on the OTC and as well up in Canada, and so the story how I came into crypto, I guess about 13 years ago, I was at a conference in New York called the Consensus Conference. A lot of your folks will know it. And at the time, I think I was really kind of more interested in blockchain and just how smart contracts, especially, were kind of working through the system. And it was really there were only at that time in blockchain and crypto, there wasn't really a lot of there wasn't the kind of enthusiasm that you have in today's space. I think we had maybe 150 people at the conference. I mean, it was small. And so, like I said, I was driven to it more by the kind of the underlying technology, like I said, blockchain and smart contracts, and by virtue of that, really stuck with it to a degree because I really liked the tech and I thought it was fantastic. So through our, kind of like I said, our merchant bank and advisory, we took a few companies public that were in the crypto slash blockchain space. And really stayed close to it, and it's kind of led to where we are today. With which I guess we'll lead there with your next question. But yeah, what we're doing today is with DelphX Capital Markets. We've come back to the crypto space.
Yeah, you've come back in a big way with taking on. This is an area that's become hot. I think it's fair to say in let's say the last 6 months to a year in the crypto space, which is of course the Bitcoin Treasury approach, obviously popularized by folks like MicroStrategy, now, of course, going by the much more boring name of Strategy. We call them just the monster here for their ticker MSTR here on the network. But of course, that Bitcoin and now ETH Treasury approach has gotten pretty hot out there. But it does also pose some problems, some challenges to firms out there. It looks like you folks over there at DelphX are trying to smooth out some of those challenges a little bit. So why don't you tell our listeners, how are you offering a structure for these folks to actually hedge a Bitcoin Treasury approach, sir?
Yeah. So that's a great question. So look, hedging is available in Bitcoin. I would think that hedging today on the OTC option space or trading IBIT puts and calls is a real day traders type thing. What we do at DelphX is we build institutional structured products. So they're similar to derivatives, but these are private placement securities. So think about for the big life insurers, for the big treasuries out there, the big funds that hold Bitcoin, or it could be Ethereum, could be Solana, could be any coin. Actually, our structure is kind of set for that. But yeah, what we do is we've brought essentially a traditional finance product to the crypto markets, which doesn't exist because Wall Street really hasn't developed anything new in the crypto space yet. I think there's a reluctance for them to develop anything new in general, actually, over the last couple of decades, which is unfortunate. But it's also fortunate for guys like us because we get to step in and kind of innovate and fill that gap. So what we do is we offer a fully transparent product, which will allow the treasuries themselves and the people who are being good stewards of those treasuries to effectively manage the risk within that treasury structure. And so we're coming into a market, like you said, where there's almost 200 publicly traded treasuries out there now. It's saturated as heck, and everyone's trying to be different. And so we saw that there was a need for some real protection to come into the space, because we also found out that there's a heck ton of leverage out there. I was in New York a couple of weeks ago, and you mentioned the guy who runs Strategy, and he was a keynote speaker, and I have to tell you, 30 years in finance, what he was talking about and how he's funding his structure is super dangerous. I've been around for a long time. I used to sit on a preferred's desk at one point, and which is, the least exciting spot I've ever been in my career. But what he's doing with perpetual preferreds, and with that type of rate structure, like before the rating agencies yanked their rating on MicroStrategy, I think it was like triple C. You're only a notch or two away from D, but you're borrowing at those types of rates. And so the assumption, obviously, and certainly the hope and the prayer is that, Bitcoin will continue to go up. But if it flatlines or if it decreases at any time, then that's a danger place to be. So what we see is for the stewards of treasuries, they should be thinking about one thing only: preservation of capital. And then, obviously riding the asset itself as it continues to gain momentum and grow, et cetera. And I think you've got to take on a long-term view to that, because, situations like 2018 and 2022, where, those Bitcoin holdings were off 64 and 74%. I mean, that's not really a good treasury asset. And to be in a treasury and have that kind of vol, you've got to go out there, if you're smart and if you're an institutionally thinking, treasury or fund, you got to be thinking, okay, if I can protect my downside, the CAGR on this thing over, the last 10 years is massive enough that even if I give away a bit of that upside, I'm still covering myself from those gut-wrenching moves when 2018s and 22s happen. And I think by virtue of doing that, not only are you being a good steward of that capital, for your shareholders and others, but you're also bringing in 95% of Bitcoin investors and crypto investors who aren't in crypto and Bitcoin yet, because there's a huge group of people who don't want those types of moves. But if you can show them a strategy where, hey, listen, we're going to give away some upside here, but you're still going to end up with dynamite returns. And if you went back the last 10 years, put this thing on, worst you ever lost was 15% in a year. And your CAGR dropped from 84% a year to 69% a year. 69% a year in my world is still, a great place to be.
It's still pretty darn good.
And yeah, I mean, and once again, if you're just smoothing out that real, that gut wrenching move, then you're doing what you're supposed to be doing. I think, and so it works for this strategy. We're normally credit guys, and our product was originally developed for downgrade protection on corporate bonds, but it works brilliantly in this structure as well. So
it does seem like slapping these two words together, Bitcoin and Treasury, or ETH Treasury. It's been a good combo. It adds a little bit of a euphemism for people who are scared of Bitcoin. If you just tell them Bitcoin by themselves, they're scared. They say, no, that's a highly volatile asset. But now you slap Treasury onto it, and it gives it this euphemism of being a low, dare I say it, risk-free rate type asset. Obviously, as you just pointed out, it is not. So that's one of my issues with these approaches, is it definitely does belie a little bit of the underlying risk that still lurks in these assets. We've joked about strategy many times. It is the perpetual motion machine, and at some point it has to stop moving. But we shall see. We'll get into that in another day. Maybe that's when your strategies will kick in, Paz. Let's get into that a little bit. Our audience, they like to get into the nitty-gritty. They like to discuss how these hedges are structured. You rightfully pointed out at the top of our show, and our listeners are hearing things like hedging Bitcoin exposure or ETH exposure, they automatically go to buying downside puts or other types of protection on these instruments. You're doing something a little bit different. So why don't you walk our listeners through how you're constructing these hedges?
Yeah, for sure. So those hedges, by the way, the OTC options, the IBIT puts and calls, not a bad way to go for the guy who's sitting there managing his own personal treasury. Okay, but when you're an institution and you're managing $1 billion, or even 100 million of exposure, you got to think of a different product. And so in our world, what worries us the most is counterparty risk. Once again, I come back from the bond world. I've lived through some pretty dire times, especially in structured credit and structured products, most notably CDS and other types of instruments like that, where counterparty risk, you thought AIG or Lehman or Bear Stearns were great counterparties. That was dead wrong. And so we take a view that if you're going to buy protection, whoever is funding that protection, whoever is selling it to you, they better put up that money, and you better know that it's there. And it will sit with somebody solid like US Bank, who's our custodian. They're kind of they manage all the cash flows in our hedge. But once again, that hedge fund that's selling that protection and basically funding it, he's got to put his money into something solid. So in our structure, what we've done, Mark, is we've taken that collateral. It has to be posted at the start of the structure, and it's invested in treasuries, and it's just 3-month treasury bills. And he earns, or she, I'll just go with he because we're both guys, but he will earn interest on those treasury bonds, T-bills through the tenor of the structure. So you've got one side, think about a treasury that wants to offset some risk. So that investor is going to buy what we call a collateralized put obligation. Think about it as a put option. And he's going to pay a certain amount of premium, just as you would for any put option. And that's going to go to the other side, which is the hedge fund. The hedge fund will take whatever that difference is from the strike price all the way down to zero, depending on how they structure it, because this is a bespoke type thing. That hedge fund will collateralize the whole thing. It sits in treasury bills for the 1 year or 2 years, for however long they put it on, such that if that option, if it comes into the money, then whoever the holder is, they can exercise it at any time. So it's treasury management 101 on both sides. But what's very different about this approach from OTC options or IBIT puts and calls, it's pretty big, because the yield-bearing treasuries gives a better pricing dynamic to this. So the economics work better for the hedge fund selling the risk. You don't have that in IBIT puts and calls, and certainly OTC options, you have no darn idea who your counterparty is, which is a very scary place to be. And if you're doing size, look out. You want to do something more bespoke. And like I said, the institutional versus the retail investor, they want different things. So this is also very customized. So everything from the terms of like strike, maturity, settlement barriers, all that kind of stuff. Each one of these securities, because these are issued as private placement securities, not derivatives, although the characteristics are somewhat similar, but they're not, because these are fully collateralized. All that stuff is, it's customized, it's bespoke. So it's really made for that, savvy treasury management, person. Whereas, if you look at OTC options or IBIT options, you've got basically standardized strikes and expiries. So, that's really kind of like that. Those are the characteristics of this that make it a very different animal from currently what's out there. But it's a traditional finance structure that Wall Street firms and people are really familiar with. It's just not offered by anybody else yet. So we think, look, there's a great, you go to Baskin Robbins, there's a ton of great, new flavors. We're just a new flavor of ice cream, but somebody's going to like that flavor of ice cream. And so that's our real approach to it. And we really do feel like we're filling a gap that exists that no one's filling yet.
So you're allowing people to design effectively flex hedges, doing that in the OTC. They could choose their month, they could choose their strike, all the flexibility that goes with the OTC side. But of course, as you mentioned, OTC, we've all learned many times, especially in the crypto world, the counterparty risk a little bit more omnipresent in the world of crypto. So eliminating that with the collateralized option. So kind of giving the benefits of column A, which is the flexibility, and the benefits of column B, which is the lack of counterparty risk, and kind of bringing them together in this approach. And I have to imagine this approach must be getting some response these days. Just as you mentioned at the top of the show, it's becoming such a crowded marketplace, the Bitcoin and ETH treasury marketplace, that I have to imagine your phone is kind of ringing off the hook these days, Pat.
So we're excited because it's resonating. Actually, we went live with the product, I guess, about a month ago, and we're getting some great response, a lot more response than we thought we were going to get, and it's all very positive. I think the hardest thing for anyone to do is to give up alpha and use that to buy, sacrifice any upside for a hedge. No one wants to do that. Everyone wants to go long, and I think they're pressured to go long. And certainly, there's a psychology out there. And it's very pervasive, especially among the big players, because obviously they're kind of tooting their own horn. They have to, in a way. It's really the fact that, once again, this is never going to stop. Why put on a hedge? Who the heck needs a hedge? Listen, we don't really actually take a view on it. I mean, our long-term view is probably that, things are going to continue to do well, but you always have events like 2018, 2022. The guy at Strategy, I mean, I remember 22 or 25 years ago, I remember listening to the same guy who restated his financial results for 2 quarters. Not only did it blow up MicroStrategy, but it also blew up the tech market, which screwed all of us at the time. And so that kind of stuff, you never know when it's going to come back to haunt and who's going to do it. And, if FTX comes back into the picture, something like that, what happens next time if there's several FTXs? Because let's face it, this has been an unfettered growth environment for these guys. So leverage, all these types of things, it's tough for the regulators to keep an eye on all of these guys. These are not like Wall Street firms, bulge bracket, groups that, the SEC has their purview on, CFTCs on them nonstop. This is a crowded field, and it's getting more and more crowded. So our view is, look, long term, you've got to be in the asset. You've got to be in it in a meaningful way. But I think there's a way to do it where you give up some of the upside in return for that downside protection and that peace of mind, essentially. So,
you're right. That is scary to see a lot of these firms because, as you mentioned, so many of them are just hyper leveraging to get into this space. So it doesn't take much of a downtick in Bitcoin or ETH to wipe out a few of these low-hanging fruit, hyper leverage names. And then, of course, that creates that feedback loop. They start blowing out, they start liquidating, and then, of course, it drives Bitcoin and ETH down even further. So you're right. It does kind of make you wonder if we are trending towards this speculative bubble as people keep leveraging and leveraging. It doesn't take much of a downtick. So hopefully some of them are taking advantage of these hedging services here, Pat.
We really hope so, Mark. Like I said, though, you can't really force a square into a circle or a circle into a square. So, these guys and the people we're talking with, it's really the ones who are the most responsible, funny enough, who actually, though, also see an opportunity. And the opportunity is to cater to that group of investors that's not in the asset yet and give them something that is so different. But it's exactly what they want. They don't want to chase another MicroStrategy. They don't want to chase some of these guys that are coming out with new treasuries, new strategies, etc. And there's no reason why these guys should have MNAVs above 1. Personally, I'm from the old school. I remember equities that were closed-end funds back in the day. Never did a closed-end fund ever trade above net asset value. It was unheard of. So at this stage, to have all these MNAVs going all wacky. It's really built on a premise of, what's going on? What's driving this? Is it realistic that this management team is going to be able to leverage their Bitcoin holdings and generate that increase over NAV that's so meaningful like that? I don't think so. A lot of these guys, they're only doing this because their original business plan completely, bombed.
It imploded.
Just leveraged the shell. You know what I mean? So it's like, okay, well, at some point, there could be some pain. And so we just, like I said, we just take the view that, hey, do something different. And I think there's a lot of room. There's so much room in this space because it's such a big, busy, robust space now. And it's getting so much more attention and credibility. And I think to some degree, our hedge does bring credibility to the space a bit. Combining a traditional finance product which has been lacking in crypto for a long time with crypto and the DeFi world, I think it legitimizes it even more so, which is kind of an interesting thought. Maybe I'm wrong, but it seems like it.
You mentioned the MNAV because you're right. We're seeing numbers thrown around out there where, it should be 1 if all things are being normal. We're far from a normal market these days. I'm seeing numbers out there average for some of these Bitcoin and ETH treasuries 1.25, 1.3. You're talking wild. So you can see why people are being lured into this market. They're getting, effectively a return just for saying they're doing this. So it's attractive and scary.
Yeah, dude, I saw one today. I think it was like 4.5. Like that was the MNAV. It was just like, what? Why? This is insane.
Those people should cash out instantly if that's the case.
Well, exactly. I would. You would too, right? And then I would just flip my money and I'd buy, straight in my, in my wallet. I'd buy some Bitcoin.
Yeah.
It's the same thing, But to that end, there's some big warning signs, right? When you get stuff like that kind of froth, and that the borrowing is just so absurdly rich, you can't sustain that borrow for long before you actually have to start liquidating. And when you go below 1 on the MNAV and you start liquidating your holdings, that becomes a whole new dynamic. And I think that could be the next thing that maybe would shock the Bitcoin asset itself a little bit, is that you would have a massive supply shock come into the market as these guys are forced to liquidate. It's possible.
What percentage of outstanding Bitcoin is held by these Bitcoin treasury names? A growing and some might say alarming percentage. So you're right. There is certainly that opportunity. I want to go back to something you mentioned earlier really quickly, because I said I like our audience. They like to dive into the weeds a little bit. You mentioned with the structure of this hedge, they're giving up some of the upside. So is it, rather than just a put, is it more of what we would call a traditional collar? Are you kind of effectively selling a covered call to the upside as well? Is that how this hedge is structured?
Not really. So it really is. You're going out and buying a put, and you're paying for that put straight up. Now, once again, this is a very malleable structure. So remember, this is a private placement security. So the two sides come together, the subscription agreements, all that stuff. There are going to be features to this, and maybe it's not coverage all the way down to zero. Maybe that treasury is just looking for coverage from, let's say, 15% lower to maybe 30% lower. Because that's their pain point, that 15% extra. So you really are kind of you're going out naked and buying this thing, and you're paying for it up front. So that it's in force. You will have liquidity because we have market makers. If one in particular is going to support this, and it can be tranched down into 5 separate pieces. But yeah, you really are just buying an option. The difference being that on the hedge fund side, they're collateralizing it. So in a hedge fund world, when they collateralize something, they borrow it, right? And so they're going to borrow it at, let's say, 4.5. They're earning a 4% coupon on those treasuries, though. So they're kind of happy because that borrow is not so bad. And in the hedge fund space, they're going to find ways to repo this. They're going to bounce the stuff around. They'll offload their exposure one way or another. But that's what makes the product very unique, is the fact that it is traded as a private placement security. It's fully collateralized in U.S. Treasury bills, and it's a very transparent product, and that's what makes it cool. But yeah, you're giving up every year. I mean, right now the pricing on a 15% discount option would be about maybe 7%. So you're giving up probably 7-8% a year. But your pain point is anything below 15% on the downside. You want to cover that. You're fine with 10%, 12% if it drops, goes up and down like that a year. But that below 15% measure seems to be the sweet spot. And if things get below that, then the pain really starts to kick in.
That's true. Well, you mentioned IBIT a few times. I'm curious, as you're kind of spinning up this strategy, is IBIT at the end of the day really the biggest competition to this? I mean, not to bury the lead for the Bitcoin breakdown coming up in a little bit, but IBIT's starting to put up some numbers. In fact, today it's at 1.1 million contracts already. So are we at risk of getting to the point where the size of IBIT is enough where the institutions say, you know what, I don't need to go through the hassle of constructing this. I can just go buy my puts or sell my puts out there in IBIT, as the case may be?
Yeah. So that's a great question. Look, I think IBIT is great, but it's certainly not an institutional product. So you're dealing with, so for example, your collateral and your security, you're dealing with the Options Clearing Corporation. Now they're good. They're back.
OCC has a good track record.
They do. They have a great track record. But you know what? Once again, you're minimizing your counterparty risk by having U.S. Treasuries as your collateral. So that in and of itself. But then the yield from those Treasuries, that changes the economics of the structure as well. So for pricing and things like that, it's very different than IBIT. IBIT, you're going out and you're buying puts and calls. Options Clearing Corporation is there to make sure that everything's going to be great if things go into the money for you. However, that dynamic on the pricing, it changes once you introduce a yield-bearing investment into the structure. And the other thing, of course, is IBIT is not customizable. You've got straight up, a standardized strikes and expiries. Here you've got something that's much more customizable, which if you're working in a good form of treasury management, you want to be as customizable as you can, because your pain points in your treasury. Not all treasuries are created equal. Similarly, not all of them will fall equally. And so you're buying this basically to negate that treasury specific risk. So
once you add that income bearing component, that is an extra step that the fund has to do themselves. So you're kind of incorporating that in there. And also sounds like for a lot of them, they're attracted by the flexibility there that they're not getting in the listed. So those two components are enough to keep the folks coming to your door, Pat.
We hope so. That's what we're working toward, Mark. It's always a heavy lift, man. I'll tell you.
Well, Pat, I appreciate you joining us. It sounds like you're a glutton for punishment. You want to stay on as we run through some of the other markets here. While we wrap up the crypto hot seat segment, if folks are intrigued and they want to learn more about what you're doing over there at DelphX Capital Markets, where should they go? What should they do?
Just check out our website, DelphX.com. So DelphX.com.
Not .io or anything. All the cool kids coming on the show these days, Pat, they're all .io and everything else.
Come on, dude. We're old school, man.
.com is old school. Finance. I like it.
Yeah, we're traditional. We're traditional finance guys.
All right, listeners, let's get into some of that finance now as we keep on rolling into the Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everyone, welcome to the Bitcoin Breakdown, the portion of the show where we break down all the action in the world's leading digital asset. Yep, we're talking about the big dog, which is BTC, looking a wee bit larger. Remember, we were off last Monday, so we're going back 2 weeks to our last show, and it's been quite the run on the Bitcoin and indeed the crypto front over the last couple of weeks. Bitcoin on our last show was a little bit shy of 112,469 to be precise. Coming up this week, a little bit north of 125,000, 125,270 to be precise, up nearly 13,000 handles, 12,801 to be precise since our last show. So, Pat, before I break down some of the vol movers and everything else out there, really quickly, give us your thoughts on that. Obviously, been a hot couple of weeks in the Bitcoin market. What are your thoughts on this most recent leg up we're seeing, sir?
It's great, man. I think, you know what? I think you got a lot of buying coming into the market. Obviously, you've got a lot of those new treasuries we spoke about. They're loading up right now. They've got a balance sheet of cash, so they're in there buying aggressively. I think it's pretty across the board. Ethereum's up, just today alone, like 5%. And there's obviously a lot of noise around XRP right now and a lot of money coming into that space. So you're hitting new thresholds across the board, which is really exciting. And I think that's driving the upward momentum for sure.
A lot of action. We'll get to XRP and ETH and all that fun in a second, listeners. First, let's run through some of the stats over here in Bitcoin. Remember, all this data coming at you courtesy of our friends over there at Amber Data, amberdata.io. The place to go to kick the tires and light the fires. And a lot of this data we're talking about here, they've made it all free now. So you folks have no excuse if you want to kick the tires on Bitcoin vol and skew and all the other cool stuff we're talking about here on the show. amberdata.io, the place to go to see it all as we get on out there. And things are looking slightly more volatile than they were a couple of weeks ago. Maybe we've been saying for a while that Bitcoin vol is on the lower end of the spectrum out there, so definitely be judicious if you're hitting bids out there. Not exactly a time to be aggressively harvesting. That said, it has ticked up a little bit over the last couple of weeks. The weekly vol was a little bit shy of 34 on our last show, 33.75, ticking up slightly to a 36. Same deal on the more standardized monthly vol metric, listeners. 30-day vol last show, a little bit shy of 34, 33.9. Coming in this week, 36.3, so ticking up nearly 2.5 points and going out to where the hodlers hang out, 180 days and beyond, listeners, was right around 41 2/3 last week, or I should say last show. And coming in this week, up about a point, 42.70 this week. So vol ticking up ever so slightly across the board. Again, still at the low end of that range. Let's get out to what the skew is telling us right now, listeners. And interestingly enough, that skew has swung to the dark side a little bit, maybe showing us, at least in the near term, a little bit of downside might be in store for us, or at least that's what they're hedging against right now. The weekly skew, which we know is very volatile, moves around a lot intraday. Right as we kicked off the show, listeners, was at a negative 2.15 2 weeks ago on the show. Coming in today, -6. So maybe showing some folks, maybe feeling we're a little top heavy here. Go out to the monthly skew. It's the same deal. 30-day skew, negative 1.65 on the show 2 weeks ago, negative 4.5 this week. So again, sliding down to the bearish side a little bit. We go out to where the hodlers are hanging out. We've been seeing for a while that premium is gone, and that is the case now. It's lost another point since our last show, listeners. It was negative 0.75 points, so pretty close to flat on the show last week. Almost -2 now, negative 1.75, which again shows just how the influx of people overriding the upside out here in Bitcoin has really changed the game. Since Bitcoin derivatives were released, the premium has always been to the upside. That's when the hodlers, that's where they want to hang out. They want to buy it for the long term out there, and the influx of people, as we're going to get to right now with IBIT. We've been talking about IBIT a lot already on the show. IBIT having just a banger day today, 71.25 when we kicked off the show, up 7.25 points from where it was just 2 weeks ago. So again, just a wild run out there. The ADV also roaring up to life, 735,000 contracts right now. It's up 140,000 contracts a day just over the last couple of weeks. If you're listening to our option block show earlier today, VIX is right about at that same level, right around 735 to 750. So you're talking IBIT now putting up VIX numbers out there, listeners, which is kind of wild, and blowing that away already today. Over 1.1 million contracts on the tape for IBIT today. So this is one of the spicier days we've seen out there in a while. In fact, let's look really quickly, see what folks are up to out in IBIT today, shall we? And looks like they're playing in your neck of the woods, Pat, on the put side, but not going quite as far out. It's about 38, nearly 40,000 of the October 60 puts going up for an average price of 17 cents, listeners. So again, very near dated downside, but maybe also reflecting some of that premium we're starting to see perk into the downside in the skew. Folks are clearly loading up on some puts here, and that's being reflected in the skew and here in IBIT. Pat, we mentioned earlier IBIT is the big competition in this space. Obviously, a little bit of a different game. We're talking about near-dated puts here. You mentioned your structures go a little bit farther out. What's the average we're talking about in one of your hedges versus obviously these weekly IBIT puts?
Yeah, so that's a great question. I mean, IBIT's actually it's crushing. I think it's even surpassed the OTC option market now for size. It's doing that well, but yeah. I mean, we really take rather than a daily trading view, we take a really like longer term cash management view on the Treasury side. So we're looking at 1-year tenors. I know vol has been really low lately, which has actually made the cost of protection a lot cheaper than it was historically. And that trend kind of seems, I mean, maybe I'm wrong, Mark, but this trend kind of seems like it's just heading consistently lower as we kind of move forward. So the volatility is just coming off. So the premiums are coming down for protection. But yeah, we really kind of are more comfortable in that annual 1-year space. So, September 26 is right now. If you're going to compare our product for pricing to anything, you would look at that mark, both on the OTC option side and on the IBIT side.
That makes sense from an institutional perspective. They like to play a little bit longer term. Of course, if we keep running in Bitcoin, they're going to be calling you to roll pretty soon here, because that strike around now not going to be too relevant. Of course, that's not a bad problem to have at the end. If your worst problem is having to roll your puts, Pat, I think you're doing pretty well out there. Speaking of doing well, let's get out here to Mara, another product that you folks like to sling. We've been talking about it a lot on our pro content, listeners. If you're checking out Options Oddities, Mara, we joke about the perpetual motion machine that is strategy and all these other ETH treasuries. But Mara, for all you wheel traders out there, has been the gift that's kept on giving for the better part of the last few months. A lot of our pro members have been trading a lot of wheels and doing fairly well. Mara on the upswing this week as well, 20 and a quarter right now, but 2.5 points from where it was last week, which is already at an elevated level. Putting up 370,000 contracts today, so that's a banger. The ADV is 421,000. That's up 73,000 from this time just a couple of weeks ago. So Mara also putting up some wild numbers out here. Let's see really quickly. What are folks up to out here in Mara? Looks like they're loading up on some upside, listeners. It's the OCT20s, now in the money calls. But these are expiring this week on the 10th. So weekly 20 calls going up about 23,000 times. Average price for these about 82 cents. I'm sure if you went in to get these now, they'd probably be a little bit pricier. The underlying was a little bit lower when they started scooping these. So there you go. 20s now in the money for about a quarter, 82 cents. You like those, listeners? Looks like somebody does, to the tune of about 23,000. So Mara has been a wild one. It's been a great put right in that 15 to 17 range. Obviously a little bit above that now. So we'll have to revisit that on our Options Oddity show on Friday, see if folks are still active in the wheel out there. But you know what else we're active in, listeners? It's the altcoin universe. So let's get there right now.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show where we explore everything that's popping off in the rest of the crypto market outside of Bitcoin, except for right now when we're talking about market cap. Kind of hard to escape Bitcoin when you're talking market cap, Pat. So let's dive in here. Last time on our show 2 weeks ago, it cost you about $29.5 billion to break into the top 10 from a market cap perspective. That got you to our old pal Cardano. A little bit north of that this week, listeners. Almost $31.5 billion this week, so up about exactly $2 billion. Almost exactly $2 billion to break into the top 10. Even though that still gets us to our old pal Cardano. Number 9, still Tron, $32.8 billion. Number 8 is Doge, about $40.75 billion. Number 7, USD Coin, $75.2 billion. Number 6, it's Solana, $128.6. I'm sure we'll come back to that in a bit. Number 5, BNB, $169.6. Number 4, it's Tether, $177.1. Yes, I said number 4 because our old pal XRP coming back to the number 3 spot, listeners, $182.1 billion. Number 2, it's ETH because, of course, it is $566.4. And the big dog, looking a little bit bigger this week, Bitcoin, almost $2.5 trillion worth of market cap, which is still just absolutely wild to say out loud. But let's get to the number 2. This was a distant number 2, probably more like a a number 5 or number 6 earlier this year, as a lot of you had washed your hands of ETH. It was looking pretty terrible, sub 1,500. It was down 50% again for the year. It seemed like, Pat, most people had given up on Ethereum. And then fast forward to now, and ETH on the run again, up a lot since our last show. It was 41.72 on our last show. Nearly 4,700 as we kicked off the show today, 46.92, up another 520 handles. I'm curious, Pat, you mentioned Bitcoin Treasury, but we've seen a huge upswing in interest in ETH and indeed ETH Treasury names just over the last few months as ETH has come roaring back to life. So is this an asset you've been watching, and are you planning to add some ETH Treasury into the mix very soon?
I mean, we would love to have an ETH Treasury join us. In fact, because ETH moves so much and it's so volatile, it's the perfect engine for this, or we're the perfect engine for them from a hedging perspective. And look, I mean, I think a lot of the ETH movement has been driven by a lot of the treasuries actively going out and buying it and just loading up on it. That's put a squeeze on the market for sure. Like, there's no doubt about it. And that continues today. So, like I said, there's a new treasury every 5 days now, or even less than that. So it's moving really, really fast, that gobbling up of the supply. But because of the volatility in that asset, I mean, you've got to be hedged if you're going to run a treasury. Are any of these guys going to do it? No, they don't need the hedge until they really need it. And by the time that happens, it's usually too late. But every now and then there's a needle in the haystack. Someone who's smart enough to say, heck, I'm going to do this. And that's where, for Ethereum, I mean, definitely you would do this with Solana as well. These are very, very fast moving, coins. And you want to basically, from a treasury perspective, you want to be basically protecting your institutional, your shareholders, your institution kind of holding in a big way. So yeah, no, it's even more relevant for Ethereum. So
yeah, if you don't see the argument for hedging in ETH, it's gone from sub 1,500 to 4,500 and change over the last few months. If you don't see the argument for a hedge there, I mean, Bitcoin's been north of 100,000 for the better part of this year, so it's kind of been in a little bit of a range. ETH has just roared back to life in just an absurdly aggressive way. If it goes back to the 1,500 level, I got a feeling a lot of these ETH treasuries are going to be going the way of the dodo, Pat. So they probably should be looking up you or some form of hedging.
Yeah, 100%. That's a no-brainer, actually. I mean, that's an easy lift, but they're so driven by one mandate, and that is just completely to just keep buying and drive up the price. That's great until the music stops, and there's no more chairs at that point. So
yes, you don't want to be the last one without a chair, and when the music stops, that is for sure. I mean, we were just talking earlier this year. We have a show that we break down the entirety of the futures market, and ETH was the worst performing asset by far. It was off 50% at one point. It seemed like just the nail was in the coffin for ETH. A lot of our longtime listeners who were big fans of ETH early on had kind of washed their hands of it. They were hoping this year was going to be the year where it not just caught up to Bitcoin, but maybe stole a march on it, and because last year certainly wasn't the year. And then, of course, it ended up selling off as Bitcoin kept around. Then, of course, lo and behold, you're right. Everyone discovers the ETH Treasury market, and now it's done effectively a 3x from its nadir out there. So, yeah, it's been a wild run out here, listeners. So certainly, if you're long a little ETH, maybe interesting time to look at some protection. Let's see how that's shaping up from a vol and skew perspective, shall we? And ETH vol not changing a heck of a lot since our last show, at least on the weekly front. Was a 62 on our last show, 61.5 this week. Going out to where the monthly folks play, which is a more standardized metric. A little bit more evolution there. 64.75 on our last show. 61.5 this week. So vol coming in slightly. Still at a marked premium to Bitcoin, obviously, but coming in a little bit. And hanging out where the holders play, 180-day vol, 66 1/3 on our last show, 63.6 this week. So again, coming in out there as well. Looking at the skew this week, not a huge evolution unless you're looking at the weekly. That was a big move there. It was negative 4.5 on the show 2 weeks ago, negative 0.6 right now. So it's pretty much swung to flat. Again, that makes sense. That weekly skew is highly volatile, and we have had a nice up move since our last show. So you expect some of that downside bias to go the way of the dodo, and that was the case. Going out to the 30-day skew, still pretty much the same pattern, negative 2.3 on the show 2 weeks ago, pretty much flat this week. and hanging out where the hodlers hang out. A little bit of that premium coming back to life, which is good to see. We don't see that anymore in Bitcoin. So ETH, one of the last of the Mohegans there, positive 1.25 last week, all the way up to positive 1.75 this week. Let's run through a couple other hot names you folks like to trade out here. Then we'll get some of your thoughts on the rest of the altcoin universe, Pat, before we get out of here for this week. Some of the hot names you folks have been trading. Of course, good old Bitminer / BMiner, BMNR, 6160, up another $6 since our last show, continuing to put up some options volume. 286,000 contracts a day. That's up 37,000 from our last show. And today putting up 375,000 contracts already. So bit of an active day out there in BMNR. Circle, which is our good buddy Greg's, one of his favorite core holdings. He's been comparing that to the Netflix of stablecoins out there for a while. Having another good run, 150 exactly as we kicked off the show. Up another $10 exactly over the last 2 weeks, putting up 72,000 contracts a day. That's actually down. It's down 46,000 over our last couple of shows. So options volume ticking down in circles today, putting up about 60,000 as we kicked off the show. A lot of that having to do with the fact that a lot of people were attracted to the high premiums out there. That has kind of gone away now. The vol still relatively juicy, 90, but it was in the triple digits for quite a long time, which attracted a lot of premium harvesters. Obviously not as much the case there, but the stock's still running. And then everyone's favorite, maybe your least favorite, ETHZilla. This one always brings a smile to my face, listeners. 256, down a whopping 6 cents since our last show, so not participating in this big rally. Putting up some numbers, though. 24,000 contracts on the tape today. That's against an ADV of 31,000, which has pretty much doubled since our last show. It's up about 15,000 contracts a day. So clearly you options folks are discovering the world of ETHZilla, even though the vol coming crashing back to earth a little bit, down to a 92, down 21 points from our last show. A lot of you folks clearly harvesting some of that vol out there as well. And Pat alluded to a few others. Let's run through some of those right now. Solana, obviously a hot one, about 221.25 on our last show 2 weeks ago. 235.75 this week, up about $14.50. And good old XRP rallying back to life a little bit. It was languishing sub $3. It was 287 on our show 2 weeks ago. 304 today, up about 17 cents. Pat, are you big watchers of Solana and XRP? And do you think those are maybe the next areas of expansion for the whole hedging procedure, sir?
Yeah, they seem to be. I look at it really from the point of the treasuries and what the public markets are doing. And Solana seems to be the one that most new treasuries are really kind of focusing on. They love the fact, they can stake it and they're familiar with it. It's become obviously much more of a more, credible coin. So I think there's going to be, definitely a push to increase that cap. So it's, what is it, 128 billion right now? That's the size of the Solana market. I mean, you could see that thing go bananas going forward because it's just got more versatility than some of the other coins have, and it's become very standardized to the point where the people coming out with the new treasuries really understand it well, and they have ways to actually kind of generate some nice yield out of the thing that some of these other coins do not have. So I think Solana is kind of the one going forward. I think Ethereum and Bitcoin, they'll still be there, but and clearly, Bitcoin's not going anywhere. It's going to be the top dog forever. But, you could easily see Solana pick up a lot of steam here.
Ooh, top dog forever. Sure. That's going to make some of those flippening fans very angry there, Pat. They think someday something's going to kick Bitcoin off the number 1 spot. We'll see.
Perhaps I shouldn't have said that, Mark. I'll take it back. Yeah, but it seems like that. But yeah, no. Listen, I'd rather be lucky than right any day. So who knows? I'll just go with luck on that one.
All right, let's run through some of the rest of the altcoin universe. We always like to ask our guests if they have any other interesting altcoin burning a hole in their wallet. So I'll give you a chance to ruminate on that as I run through some of the final altcoin for the week before we get out of here, listeners. Everyone's favorite, maybe your least favorite, it's Doge. Was about 24 cents on the show last week, 27 cents. So continuing to climb up a little bit, up a whopping 3 cents over the last couple of weeks. Litecoin having a bit of a good run as well, 105.31 on our last show, 119.74 today, so up nearly 14.5 handles. Cardano, 82 cents on our last show, about 88 cents this week's up nearly 6 cents. Polkadot, 3.99 last show, 4.39 this week, up about 40 cents. And everyone's favorite, certainly in our pro chat, good old Shiba Inu, 1,000,000 zeros, 1209 2 weeks ago. Listener, this week, ticking up a wee bit, 1,000,000 zeros, 1296. So maybe you can finally pay for the hubcaps on those Shiba Lambos you're all talking about here in our pro chat. But before we go, Pat, are there any other interesting altcoin that you're keeping an eye on or maybe are burning a hole in your wallet right now you want to share with our listeners, sir?
Mark, I appreciate you asking me, but there really aren't. We're focused on the big guys.
You're all in on the big boys. I get it.
Yeah, and it's only by virtue of the fact that our focus is on where our hedge can actually be most widely used. And so yeah, we really are kind of specifically focused on the big guys. The top kind of the top 10 is where we want to play. So I'll leave it at that. But thank you for asking.
And we'll have to leave it there for the show as well. Listeners, Pat, I appreciate you being a trooper and joining us throughout the entirety of the show. Most folks are too scared to do that, sir. So well done staying on. You acquitted yourself well. And one more time, if folks are intrigued, they want to check out the world of Bitcoin and potentially ETH and Solana hedges down the road, where should they go? What should they do?
If they want to check it all out, go to DelphX.com, man. DelphX.com.
There you go, DelphX.com, not .io. They're not quite there yet. They're going old school, which I like. I appreciate. DelphX.com, the place to go to kick the tires and light the fires. Of course, while you're checking things out online, check out our friends over there at Amber Data, amberdata.io, the place to go to kick the tires and light the fires. That GUI is now completely free for everybody, so if you want to check out all of this stuff we're talking about and a whole bunch more, we really just scratched the surface. Amberdata.io, the place to go to kick the tires and light the fires. That's going to do it for the Crypto Rundown this week. Not going to do it for the network today. We'll be back after the closing bell to break down all the action in the world of options with the latest addition to the network. It continues to grow. 3 new shows. 2 of them just in the last few months. So no rest for the wicked, listeners. The Hot Options Report coming to you after the closing bell today. Then, of course, we're back again for all of our pro folks tomorrow with a great pro Q&A session. If you want to check out all that fun, theoptionsinsider.com/pro. Then we're back with our usual array of content throughout the rest of the week, listeners, until we're back next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.